What's up everyone, it's Matty from Logikfx, and in today's video I'm going to be going over the trade idea that I've done on GBP AUD, and that's the upcoming trade idea for November and going into December. So what's been going on with the GBP AUD and what's been going on in the UK specifically? Well, today is the day that marks the day that the national lockdown ends in the UK. So what do we have? We've got customers buying things, we have businesses opening, we've got trade opening up as well. All these are massive things that are going to affect the GBP currency exchange rates. What else has been happening in the background though? Is there something that is much bigger that we're all missing? Yes. Brexit is still a thing, and an EU-UK trade deal is still a massive factor that we need to be considering. The OBR has estimated that a no deal confirmation on the trade deal that's coming up is going to have a larger economic impact than COVID-19. And the main reason there's been this lack of progress is because the UK and the EU governing bodies probably haven't had time to actually consider this due to the pandemic. And there's probably been a lot of lag due to that. So going back to the analysis, what's been going on? Well, overall, in a high-level summary, GBP AUD looks like a really good short position. How do we know? What are the economic indicators saying? The macro currency strength meter is saying, great, we're ready for a short. GDP differentials, we're still not there, not looking great. We're on a red light there, which means, nah, sorry, you're not agreeing with us. Import and export analysis, we're green. Interest rate differentials were green too, so they get the get-go for the shorts. Domestic stock market performance, it's in red, but it actually should be green, and I made a mistake here, so I'll tell you about that later on in this video. And the market sentiments and price trends, all green. So overall, GBP AUD is looking like a really, really good idea. So let's go into the nitty-gritty details of what's going on. And I say nitty-gritty details, it's probably a high-level summary of what's going on because you all can't be bothered to look at data. I've done all the data analysis for you. I'm giving you the results. Okay? So the macro currency strength meter, what is it? The macro currency strength meter is what we use to basically do the fundamental analysis of individual economies, whether that's the UK for GBP and Australia for the AUD. And in this case, what we've done is analyze GBP AUD using this indicator and concluded that we should only be shorting GBP AUD going into the next month or so. Why is that? Well, if you've ever used a MACD indicator or an EMA or an SMA where lines cross over, you kind of know that when the shorter line goes underneath the longer line, then we should be shorting, right? That's what you all got taught, I guess, on YouTube or whatever you've been watching. Well, that's a similar case here. But in this case, our macro currency strength meter uses fundamental data, uses economic reports and actual useful macro factors that affect currency exchange rates. So what's been happening? Well, since the 14th of November and the 21st of November, what did we have? People that use indicators here will say there's a crossover. The GBP, the blue line, has crossed into the negative region of the macro scores, whereas Australian dollar has continued to rise since October. What does this mean? It means on a fundamental level, we should only be looking to short GBP AUD. Done, dusted, we know what bias we want to be having now. That's it. Now we can focus on only looking for shorts. We don't need to worry about looking for longs, looking for ranging positions, shorts. Simple. Next. What else did we consider? GDP differentials, this was red. Why was it red on our high level summary? It was red because of this. The GDP change in differentials are actually at 8.5% in favour of the UK, giving this a score of 100, which means it's green and overall it signals a long bias using this economic indicator. Now, that goes against our short bias, doesn't it? Yep, so we marked it as red because we're not biased and we are looking at the data and concluding off the data whether we should be long or short here. This is saying red, so we need to wait on this indicator. What's going on with the import and export analysis? Well, the import and export analysis was green. So let's see what we've considered. We've considered gold. A lot of you traders out there will know why we consider gold. Coal. Again, our LITA traders will know why we consider coal. and oil too. These are three big commodities which are both imported and exported between the UK and Australia and the rest of the world. So what about gold? What's happening with gold? Well, gold, we found a minus 45% correlation, a negative correlation, meaning when gold prices go up, GBP/AUD goes down, and vice versa. Recently, data though has suggested that potentially we're looking like a GBP/AUD long based on gold. So this is a red signal right here. It's not good for our short idea. So moving on to the next, what do we have? We're looking at coal. Coal, on the other hand, has a minus 62% correlation, so an even stronger negative correlation. But this time round, the orange line, the gold prices, have been spiking. They're going up, and they're going up strong. And what happens when coal prices go up strong? Well, in the past, when coal prices have gone up, GBP/AUD has gone down. When coal prices have gone down, GBP/AUD goes up. Right? Coal prices up here, GBP/AUD down here. Coal prices down here, GBP/AUD congests, and then it goes up. Okay? So it's a really good indicator overall for trading GBP/AUD. This goes the same for oil as well. Oil prices, minus 62% correlation as well. This time round, oil prices have been rising since March, April, that time. Basically, once COVID news started dissipating in the news, oil prices actually started taking a rebound. Again, really good for our idea because this potentially means we're looking for a short side move in GBP/AUD. And overall, over the three indicators, 2 out of the 3 indicators are signaling a short side move, which means our import-export analysis is green. Great, right? Let's move on. Interest rates. What's been going on with the interest rates? Well, the interest rate differential in blue has been on the rise over the past 5 years, right? What has been happening with GBP/AUD? Well, actually, since 2016 over here, it's kind of followed that trend. It's followed that economic indicator. It said, right, oh, interest rates are going up. Interest rate differentials going up. Maybe we need to follow too. So they started going up as well. What happened in February, March? Interest rate differentials took a hit. What happened in the next month? Well, from March to June, GBP/AUD had one of the biggest downside moves since 2015. Impactful stuff right here, okay? Overall, this potentially means if this downwards blip continues, it stagnates, goes down again, our GBP/AUD short is looking like a really good trending movement. We might see some up and down movements until that happens, but overall, interest rates got the green light to go. What about the FTSE 100, the UK stock market priced in Australian dollars against the GBP/AUD exchange rate? Well, they look very similar to me, right? GBP/AUD in blue, FTSE 100 in orange. They look near symmetrical, but one thing being different, the FTSE 100 in AUD seems to predict the GBP/AUD exchange rate. You can see over here, in 2015 July to November, FTSE 100 price in Australian dollars started dipping. What happened to GBP/AUD? It started topping out. As that trend continued in the FTSE 100, boom. Big GBP/AUD downside movement. Now overall, this is looking really good Friday. On the high level summary, it was red because my mistake, I didn't realize that I was looking at the wrong point in time. So you can see here, since the highs that were made pre-COVID during March, the stock market hasn't even recovered yet. Meaning UK companies got really hard hit, and overall it's not looking good for the GBP. So that's why it should actually be green, because overall since that point in time, it's still not recovered. If this was above that point in time, it would be looking great for a long. But because it's not, it's looking good for a short and our idea. So now overall the economic analysis, the different imports and exports, stock market stuff, we have a bias now to be shorting GBP/AUD. Are we going to go in it? Are we going to trade it? All on the short GBP/AUD? No. Now that we've valued GBP/AUD, we know that we should be selling it because it's looking overpriced. We need to actually optimize that. We need to know when to get in. Okay? And in that point in time, is when we start looking at the commitment of traders report, and in this case, our COT indicator. What is it saying? Well, the top one is saying that the pound is being shorted by the hedge funds. And on the below, it's saying that the Australian dollar is being longed by hedge funds. What does that mean? GBP AUD is being shorted by hedge funds. That means we're not trading against the market, and we're trading with the market and with the trend. And that's looking super, super good for our GBP AUD idea. So now that the sentiment of the market aligns with our idea, we've actually nearly got the green light to go and enter that position. But what is the final thing that we need to consider? And after that, the risk side, which I'm not going to cover in this video because we all have those risk management principles that are to us. What is it that we need to consider? It's the technicals. It's what everyone loves. Everyone loves drawing these patterns. I'm not going to cover it too much because you all should be knowing what you're doing here. You all know your fancy indicators, your line draws, your patterns, blah, blah, blah. All I've done here is marked out a really simple level where sellers have come in. It's been rejected. You can say that there's a head and shoulders potentially forming here. But overall, we're looking for a downside movement. And this is one of the major points of resistance we can see currently. Now, if these levels do hold, they're looking like a really strong downside move. And it's really one that's on my watch list right now, and that I'm actually on the edge of clicking that trade button. Okay? So let's see what this position does in the next few months. If you actually want to analyze the markets like this, do go ahead and click that link in the description to watch one of our free webinars if you're new to the channel. If not, keep watching our videos for free. We'll be releasing, well, I'll be trying to release more of these trade ideas in the future. And if you kind of want to see what you're kind of getting as part of the LITA program and being a LITA trader and accessing our technology, let's take a sneak peek. So the LITA portal looks something like this. This is where you get access to the currency trading masterclass. The stock trading masterclass is going to be coming soon. You get access to our Excel PDF downloads. You can apply for mentorship, speak to me or Marcus one-on-one, with 30 minutes to an hour a day. And two of the tools down here, three, are the ones that we use every week when we're doing our analysis. That's a macro currency strength meter, GDP differential meter, and the COT indicator. We do have some more upcoming technology pieces, such as the interest rate differential meter, which will be so useful for you traders out there for saving time when trading. Okay, so the macro currency strength meter, this is what it looks like. We have the GBP AUD line chart here. That's familiar from our trading blog. And overall, we've got some cards up here which tell us at a quick glance what countries are strong or weak and what should be happening to their exchange rates. This is our edge over the markets. This is why people come to Logikfx. This is why and how we can analyze different economies so quickly and come up with fundamental trade ideas so much faster than the rest of the traders out there. What else is there? GDP differential meter right here. We can analyze the GDP growth rates of all these countries here between each other in the click of a button. We don't need to be trawling through Excel, clicking and copying and pasting loads of stuff, blah, 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 blah. Nope, all in one spot. Useful, easy. This is how I like to do it every week. Saves me so much time. Same with the COT indicator. We can see the sentiment of the markets on these major pairs over here. And really, just a really useful tool. So if you all want to be part of that, definitely click that link in the description. If not, just keep watching our free videos. We'll be releasing these free type of videos. Eventually, you'll get the hang of it. You can use our free trades. You can use our free analysis. Take it in conjunction with what you're already doing. I'm not forcing anyone here to try to do anything. It's Matty from Logikfx. Hope you enjoyed this free one. See you all in a bit.